What's up, you guys? Today, Tesla ended up the day up about 0.5%, but I closed out my calls earlier this morning. And in this video, we're going to be going over why I closed them out. We're going to be going over the actual position and what that was. We're going to also look at if I think Tesla can still move up to potentially 208, maybe even $220 in the next couple of weeks. Now, the position that I closed out today was calls on Tesla. These were the April 19th $200 calls that I was talking about and calling out over on X as well as here on YouTube. If you guys want updates to all of my trades and my information as soon as possible, do it on X, or even better, go follow our Discord community. It is $5 a month, but the whole reason for that is to, number one, keep scammers out, and number two, to just keep the quality of the group, the integrity there, honestly. Now, looking at the actual setup, what were we looking for with Tesla? Well, this was the initial post that we went through on February 26th here. I posted this at 9 a.m. We said that there was an inverted head and shoulders. We were looking for a weak retracement, potentially down to about $190 worst case scenario. And then we were hoping to see a bounce test. My stop loss was $180 with an upside target of $208, which gave us a 2-to-1 risk versus reward. Now, I ended up closing some profits on Tesla the day before, and the only position that I still had were these current calls that we ended up entering here. And you can see that our initial entry was 9:40 in the morning. Right here at 228. I'm sorry, this is when we closed it out at 9:40 in the morning. And you can see that these were the two executions that we ended up entering here on the 27th. So we ended up closing out this morning, and why, right? Let's go over that first, because I definitely closed out my position too early, and I want to explain why I did that and also how we could potentially circumvent that in the future. Now let's start here by looking at the daily chart, because it's what that initial analysis was off of. There's a couple of important things that we have in play here. The first thing is this gap. So we have a gap down from earnings. These price gaps tend to be very important because in most cases, price will come back up to fill or test where that gap was before. So we have this initial gap down. You can see that we get a bounce. Then we end up getting a lower low where we push down, as we said, and broke $180. We come back up to test a very important level of $195, which was a resistance point again. So the fact that now we've touched this level 2 times brings a very high probability that instead of making a lower low here, that we will actually probably retrace to meet this prior left shoulder, or the 0.707/0.618 on our Fibonacci, for those of you who are a little bit more advanced and you know how to draw fibs and you understand structure and whatnot. That is a pullback down to meet where this level was. So this is where we first were looking to go long. We were looking to start a long position here. If you guys remember back on the 15th, setting a stop loss at a lower low and then looking for that move up to fill the gap. That was the initial trade setup. Now, a couple of days after, we get this massive push up. This is where we started clipping our profits. We were waiting from fib low to swing high for a pullback down into that support level of 188, which is where we ended up entering here. If you guys remember last week, this is what we were talking about. Then we ended up bouncing, and our final target was back up around $208, which we still have yet to fully fill this gap. So even though we were looking for just this move, we were actually able to scalp it along the way. And I'm going to show you that when we move down into the 15-minute chart in just a moment. But where we are right now, I do think that we could still see another push back up to maybe 208 to $210, but I did end up closing my position out because the bulk of the move that I really wanted was back up to $206 to $207. Now, let's talk about the smaller time frame before we get into this potential move back up to $240, which could happen in the next couple of months. The reason that I ended up closing this position out this morning was because on a shorter term time frame, I was expecting a potential retracement back down into this level. This blue area that I have thrown out here, this is called a fair value gap. And basically, these fair value gaps, much like a regular gap, tends to have a retracement back in to test that level. And what happens is price initially impulses, as you can see on this candle, so aggressively that all of the institutional investor, or institutional money and market makers and whales and everything that you think, all of those people that can actually move the market are able to get in at these limit orders and these position sizes that they want to actually build. They don't care to be buying up at 204. They really want to fill back in these. So in most cases, we will look for that retracement either back to equilibrium, so the middle of that fair value gap, or all the way back down to take that fair value gap out. So this morning, I saw that we had this liquidity level right here, this very strong support that we were bouncing off of, saw a bunch of pulls through. And what I was looking at was this potential head and shoulders. So we have a shoulder that formed here, and then we have a head or a higher high that formed here, followed by, at the time, because we have to remember that everything here was not already there. And I thought that, hey, there's probably another shoulder forming. And so I expected that we'd probably reject at 202, come back down to test 198, and maybe pull our way back down to about $194. And in this instance, from swing low to swing high, this would have brought us right back down into our 0.786 Fibonacci level, which is my buy zone right here. That would have given us a massive potential trade setting up to the upside over the next couple of days for a 5% move to the upside with a stop loss of about 191. But this did not happen. Still could, but at this point, it's yet to happen. Instead, we took out that level, tested this high, double topped, and now we're going to see if tomorrow we get this bounce around that 200 level and continue our move up to 208, or if we break it and come back to fill that fair value gap. So at this moment, I currently do not have a position on Tesla other than long-term shares and some $240 March calls that I've been holding for a very long time that I'm down massively on. If you guys want to get access to all my trades, check out our Discord community. The link is in the description. All of my trading bots are over there, which are coded by myself, following a very simple strategy. What we're focusing on at all times is consistently trending tickers that are moving in a very healthy and sustainable manner. And all we're looking for is to find the natural flow through our algorithm to find very simple entry and exit points. I hope this video helps, guys. Thanks for all the support. I'll see you guys next time. Peace.